For your listening pleasure, here's Polizzi and Rose, covering the week of media, marketing, and digital content news. This Old Marketing. Take it away, boys.
Well, hello, my friends. This is Robert Rose, and welcome to episode number 328 of This Old Marketing for Tuesday, June 16th, 2022. And with me, as always, my good friend, my colleague, a guy I got to see this week, and a guy who could have totally fit into Marilyn Monroe's dress, Mr. Joe Polizzi. You saw this, yes?
No. Well, first,
no, you don't know what I'm talking about?
First of all, you're not gonna start this over, but it's Thursday the 16th, not Tuesday the 16th.
What did I say,
Tuesday the 16th, which is fine. Because there will be a Tuesday the 16th at some time during some months. So we'll just
fantastic.
Leave it at that.
I'm not going to go back. I'm not going to go back.
That's
then.
why that's the greatness of This Old Marketing is we don't care. We really just,
we leave
it all
the mistakes. Leave it all on the field.
Now you can explain the Marilyn Monroe thing because I've obviously been out of the
Okay. You are definitely out of the loop. So it is going around the internet right now. So my neighbor, Kim Kardashian, decided, I guess, at the behest of Ripley's Believe It or Not, who owns the iconic dress that Marilyn Monroe sang Happy Birthday to John F. Kennedy in, which is a beautiful sequined, very sexy dress. Mm-hmm. She was going to wear it at a gala. And so apparently, as the story goes, and I'm just reading from what the media tells me, she tried the dress on. It didn't fit. So she went on a binge diet to drop the whatever number of pounds she needed to drop to fit into the dress. Still didn't fit. So they basically put it on her as best they couldn't zip it up. So she wore a fur to sort of hide the fact that it wasn't zipped up in the back, but then proceeded to damage it pretty significantly. Yeah, during her wearing of the dress. So people are upset. People are upset that she has destroyed a piece of history of this iconic dress. I find it so interesting what people are really upset about these days, but nonetheless, it's quite the news item these days for Kim Kardashian ruining, quote unquote, the iconic historical. And it is, to me, I'm not sure what to gain Ripley's would have gotten out of this, because, by the way, she changed right as she got off the red carpet. She changed into a replica of the dress for the remainder of the evening. And so why they didn't just have her walk in with a replica of the dress and sort of use that to market and feature, because I'm sure this was a marketing thing, trying to market up the fact that they own the dress and have the dress for display. But overall, it's just a very interesting and silly thing.
Well, to take your cynical nature, maybe it happened exactly the way it was supposed to happen. We're talking about it. Would we have talked about it if it didn't? No.
Yeah, there you go.
And we're talking about Ripley's, and Ripley's doesn't get a lot of love anymore. So
that's true.
This is great marketing.
But they're not getting a lot of love now either, though. I mean, the general narrative seems to be they really screwed the pooch here by letting her walk the red carpet in this dress because it's damaged. They have photographs of it actually damaged, and so you wouldn't think they would have let that. I mean, I can't see an upside for them in that, but
first of all, are they real photographs or are they deep fakes?
No. And
you know what
color is the dress? Is it gold or is it blue?
If they would have made an NFT of the dress, then it would not be damaged. And many people could have owned the NFT.
There we go.
Right?
I'm waiting. Yes. Well, here we go. I think we should start a new NFT collection called the Bored Kardashian.
Oh my God! You know how that would take off. That would absolutely.
It would be huge. The Bored Kardashian.
And you could, and you would be the
you
right
have a Bored Kim, a Bored Khloe.
Well, you would be the right project owner for that because you do know quite a bit about the Kardashians because you live so close.
I don't. I actually don't. I know them as neighbors. I do not know them as people.
Don't you get together for like cheese and wine every now and again?
Oh no. They are very let's just call them security heavy, and rightfully so. Look, there are a lot of weird people. Most of the incidents, I will tell you, in our neighborhood have something to do with somebody trying to break in. So I understand why they have the security, because there's some just weird people out in the world that are trying to, I don't know, see them for some reason. But
there are.
Yeah.
So here's my question.
Yeah.
Do you ever see
Yes.
do you ever see Godfather Part 2, where
of course,
where the Don's place gets broken into, they fire the shot at Michael Corleone, and then they release the dogs. You remember that? They release the dogs and they're looking for the. That's my question. Do they have I know they have all the electronic security, but do they have dog security like that? I think
they do not.
A special amount.
Not that
of
I can see. Yes,
I think
not
they do.
Not that I can see. I don't believe any of them have pets at all.
Well, they're not.
That I can
dog
see.
Security. They're not necessarily pets, are they? They're part
that's
of your
true.
security force.
That's true. They do not have any animals at all, as far as they have no guard cows, they have no guard goats, they have no guard horses, nor do they have any guard dogs, to my knowledge.
Guard cows.
Guard cows, yes.
It's like
guard cows in mamby-pamby land, my friend.
Yeah, did you get that new ADT security system? No. I got birth of the cow right here.
Yes.
Take you out.
Yes.
2 seconds.
They hold on. The guard cow, it steers your security.
Oh my God.
How about that?
That's brilliant.
You see what I did there?
Oh, that's so good. The guard cow. I think people would buy into that.
It steers your
Absolutely.
security.
Before we get much further, you have. I mean, you've sort of been announcing it, but it actually is on you.
It actually happened. Yes,
you're doing it. I want to hear about it.
We opened up the front doors. Yeah, we opened up the front doors of Experience Advisors. So thank you to those who had waited and were so patient in the sort of waiting queue, who had put in applications to come into the community. We've opened the doors to them. So the way we're doing this, by the way, is in I'm calling them classes. So I mean classes as in sort of the class of 85, the class of 86, not like class, like first class, second class. But it will be those who sign up have signed up now and we've opened up the front doors. And just to be perfectly transparent, there's not a lot there right now. I mean, it's new, it's brand new. So come in and you can scrape up the joint if you want to, because there's not a lot of content in there yet. But we're opening up and we're new and we're going to start some stuff. Class 1 is in, and for listeners of This Old Marketing, if anybody wants to go apply and become part of Class 1, which I'll keep open until early next week. Let's call it Monday of next week to give folks a chance to listen to all of this. And we'll, if you want to come apply, you'll be part of the first class, the class number 1 coming in. And each week, then each Friday, I'm going to then process the new applications that come in, and there will be Class 2, and then the following Friday will be Class 3 and Class 4 and Class 5 and so on and so forth. And hopefully we'll build a little thing. The idea is anybody who is a consultant or advises people in the area of content, customer experience, digital marketing, basically anybody in the customer experience, that's what we're going to talk about. It's a community of those who help others optimize customer experiences. And we have basically, when you sign up, you'll see there are 4 categories, not for segmenting people, but for just identifying so that we can try and keep a balance. We have storytellers, which are people who create content and create customer experiences. We have strategists, those who actually advise other companies or their bosses on creating customer experiences that are strategic to business. We have students who may be older or younger, but basically are there just to learn and lurk and understand. And then ultimately, those categories become how we'll try and balance the community to just get really good stuff in there, good tips, tricks, templates, ideas, all of it powered with Idea Coin, which is the creator coin that I created. and through the rally system. And basically, I'm encouraging people to not go buy the coin, but rather come in and participate in the community, and you'll get it for free for throwing out what? Well, good ideas, hopefully. So that's the joint. And then, there's an email newsletter that goes along with that if you're a member. You don't have to subscribe to the email newsletter to be a member if you don't like email, but that's where we'll keep everybody up to date on what's going on and curate stuff. We're going to have live Zoom events. We'll have our first live Zoom event in mid-July, where we'll have what we're calling a navigation session, which will be, sort of how are we navigating the economy, how are we navigating clients, what's going on from a trends perspective, and hopefully just create a valuable community where we can talk about stuff. And that's the joint.
And this is all free.
Oh, all free. All free.
Free. This is
free,
amazing value. I'm not going to sign up, but other people should.
I understood. Yes, I absolutely would not have expected you to even bother to participate. Yes.
I like it. I like the concept. I think you got something there.
Thank you. Yeah, it should be fun. It should be fun. The whole idea is that at some point, we're using Discord because Discord integrates so well with the Rally coin. Though what my hope is that the community really becomes one that can meet in person, that can meet online, and that can share ideas. And Discord literally just becomes a mechanism of sharing ideas, not necessarily a destination. So, it's an experiment. We, as I say many times in the invite and in the copy of the website, I'm Indiana Jones here. We're making this up as we go along. So hopefully it's something interesting. And by the way, the URL is experienceadvisors.io.
Of course it is. It would have to be.
Of course it's the .io. Of course,
if it wasn't IO, I would be disappointed.
That's right. That's one I understand. All the kids are dancing to
the IO. So you got that right. Well, good. Well, I wish you the best of luck.
Yeah.
And as I think,
thank you. Yes.
I think you're right about the experimentation. I was on an interview this morning. Somebody was asking me about Web3 stuff, and I said, "Look, you got it. What we're seeing right now in applications around Web3 is like Netscape Navigator during the internet age starting." I mean,
that's right.
We're so early. We have no concept of what this is going to be. So, I mean, I look at everything right now that's going on as a test and experiment. We learn, we see what's going to take, and we'll go from there, knowing that we've got a ways to go. So
that's it for you. That's exactly right. So I'm looking for it to be a joyful, fun project that everybody can get some value out of. I mean, it goes all the way back to, and I mean this earnestly, it goes back to the thing that I learned from my grandfather so many years ago, which I quote him on the website, which is, what experiences have you created for someone today? Because when you create an experience for someone, you get to have the experience too. So that's the whole point of this thing, is to have fun, get good ideas flowing, and meet some people, and just have a place to hang out. And so the whole application process is not to really provide any sort of, velvet rope and bouncer situation. It's much more just to make sure that we get people who are, who want to be there, right? We're not looking for, the people who are looking to sell stuff and all that kind of thing.
Got it. Very good. There's definitely a niche there, for sure. There's a lot of people. I mean, there's just definitely 37 people that do exactly what you're saying.
Right. That's exactly right.
I think you'll find
37.
I think you will find them. You probably already know them all.
So, I probably do.
So, yeah. No, it's just funny. It brings me back. When I launched, we were having dinner with friends.
37.
No, seriously. When we were having dinner.
I'm going to put that on the front page of the website.
Are you one
There are
of
at least
30,
37 people who...
Exactly,
Joe Polizzi.
No, I was having dinner with friends. This is back in 2010. And I was telling them about Content Marketing World. And my friend said, so how many people do you think would come to an event like this? And he threw out the number 29 for whatever reason. He's like, you think you'll get 29 people? And I remember that always because we, as we got 600 that year and then 1,000 the next year, whatever. I said, "What do you think of my 29 people? You whatever." So your number is 37. I dawned that on you, and I want you to go way beyond that. Although, as we talked about, you don't need you just need your super fans. You just need a small group of passionate people, all pushed and focused in the right direction, and you got something. So
that's exactly right. That's exactly right.
Very good.
This is All right. Well, we should get to a show since we're here.
I didn't even know
we're actually here.
We were live. I thought we were just chatting like we do beforehand, which is, by the way, not anything different. This is how we normally talk to each other, which is kind of weird.
Absolutely.
In and of itself. But go ahead.
We do have a fun show. We have some interesting things to talk about. It would be remiss if we did not talk about the state of crypto, the economy, and where things are, which have taken a real interesting turn in the last couple of weeks here. So we'll talk a little bit about crypto and layoffs and the industry and tech and media and all those kinds of things. We'll talk about a Canadian bill, meaning a legislation bill, not just a dollar bill, but a Canadian legislation bill that might actually hurt content creators and content marketers in a very interesting way, and we'll try and sort through the confusion there. Facebook pulls the rug out underneath media companies. Yeah, that's right, yet again. So we'll talk a little bit about that. And if time, we'll talk a little bit about the Washington Post and what they've been doing both on the media side as well as the technology side, completely really changing the entire business landscape of what Washington Post really is all about. Joe is going to, he's going to talk about why you should just give up and really give up on life.
Stop it. Come on. It's very motivational. We're going to talk about why you should not give up.
And I'm going to rave about two things, actually. One is a recent article that came out yesterday from Mark Ritson, let's just leave it at that, Mark Ritson. And I'll talk a little bit about that. And we'll also talk about the fact that AOL, it's back, baby, and talk a little bit about how you might get to experience that 1996 goodness. So some fun stuff to talk about, I think.
All right. Well, let's start with the economy.
All right, let's talk with the bad news. Yeah, let's start with the bad news.
Everyone's feeling it, right? I mean, it's almost the topic of conversation is inflation, the price of gas, the impending recession. And of course, we're going to talk about it.
I'm getting so many questions. Yeah, I'm getting so many questions around crypto and how low can you go? How low can you go? The articles that we're going to link to two articles that sort of make up the basis of our discussion here. One is coming out of CoinDesk, which is noting that Coinbase, and by the way, Coinbase isn't the only one. It just happens to be the one that is laying off maybe the most of what we've seen here. Coinbase laying off 1,100 employees, reducing its workforce by roughly 18%. Brian Armstrong admits the company grew too quickly. Really? Coinbase is laying off around 1,100 employees as part of a cost-cutting plan, the company said in a filing on Tuesday. Coinbase initially said in May it was paring back its hiring plans, and then later said it would rescind new job offers. The latest plan involves cutting the workforce by around 18% as of June 10th, which will have around 5,000 total employees as the end of the current quarter, the company said, adding that it expects to be executed by the end of the second quarter. Coinbase estimated it would incur $40 million to $45 million in total restructuring expenses. On Tuesday morning, Coinbase CEO Brian Armstrong published a note that was shared with all employees. We appear to be entering a recession after a 10-plus year economic boom, Armstrong stated, before alluding to the potential of another crypto winter. The article goes on to explain how Coinbase shares are down almost 80% this year, and then how analysts have basically lowered revenue estimates. Coinbase isn't alone here, of course. It's just one of many companies in the tech space and especially in the crypto space that have been hurting lately. The other article that we'll link to here is from MarketWatch, which talks about how Bitcoin itself, the cryptocurrency, among others, Ethereum, Cardano, Solana, all of them, they are tumbling. Bitcoin tumbling below $21,000. And it could get a lot worse, says MarketWatch. So what say you, Mr. Polizzi? Are we in recession? Are we headed to recession? What's going on here with crypto and the economy at large?
Well, it seems like we are in the middle of a recession, well, at least the start of a recession right now. And if you look at any of the market pricing that goes on with crypto or the stock market, that's what we're preparing for. The markets are always ahead of this game. So we see what's happening with inflation. You've got the Fed raising interest rates. So I think they raised 75 basis points yesterday, as we talk about 2 days ago. We talk about this. That's the largest increase since 1994. They are really trying to stave off some really serious inflation that we actually knew was coming. Where I was surprised is I thought that Bitcoin itself would be a good hedge against inflation, and that was the theory from a lot of people. But what we've now realized is that it is considered a risk asset, just like when you look at the high flyers that were on the NASDAQ, those stock prices are down 60 to 8. Like, look at Roku. Like, how much I love Roku. I love the company. I love the business model. That stock's down over 75%. So this is not just a crypto thing. This is all risk assets. Things are flowing into value. The question right now is we are in a formal bear market. If you look at the S&P and you look at NASDAQ, the Dow's on its way. So you just have to say, okay, well, what do we do from here? And I guess a couple takes are, if you're patient and you're young, this is a wonderful thing that just happened. Because we have been going through, outside of the blip during COVID-19, and how that developed, and we saw March and April were sort of crazy. We've had an 11-plus year run bull market. And there's a good portion of the young youth of America or youth around the world that have never seen a recession, have never seen anything like this. I mean, I remember during the Great Recession in 08, 09, I remember that really well because we launched our business during that time. I remember what happened in 2001, 2002. So I think it's good that we remind ourselves that things don't always go up. And what I think it's doing right now, and you're seeing a lot of these really strange projects, specifically in Web3 and crypto, that probably should have never happened. Because you had a time last year, we talked about it on this show, where you could throw money at any project, buy any NFT, and it would go up. Well, now you're back to reality, and this is when the work gets done. If you talk about some of the greatest companies in the world, we talk about the infamous Intel started during a recession. This is when great companies get started, and this is when if you're starting out, you can really make up ground. So if you were thinking about launching that NFT and Web3 project, well, now might be the best time of all, because you're offered a little bit of forgiveness. You're offered a little bit of experimentation. You're definitely offered a lot of patience and time to get this done. And if you just look at cycles and you believe that we are at the start of a recession, you probably got a couple of years here. So I guess my final I think I talked about this last week, Robert, but now is the time. If you're in content creation, you're in content marketing, now is the time to really, really get focused, deliver value for an underserved audience, whatever that is. Find the niche that you could dominate at. Look at different ways to diversify your revenue streams and deliver consistently. Just like you're talking about with your new project, that's going to succeed or fail based on you delivering consistent value to your community. That saves every project on the planet. And we know that content projects don't make it. The ones that don't make it are usually the ones that stop. So we have to keep going through this. It does take time. So, yeah, I mean, it's kind of a downer. I mean, most portfolios have really taken a hit. And I am a Bitcoin believer through and through. I'm a decentralized finance believer through and through. I believe in the future of Web3. And so I've got to get past the temporary lull in pricing, if you will, and say, wow, what an opportunity. And it depends on if you want to take advantage of that opportunity or not.
Yeah. Yeah, it's, look, I think one of the things that can easily happen here is that people get freaked out.
Yes.
And I think everybody just needs to take a breath. Because here's the thing, a few things to remember. One is The stock market is not the economy, first of all. So, only it's roughly 56%, 52%, depending on whose number you believe, of American adults own stock. So the stock market is not the economy. That said, the economy, neither is the crypto market, by the way, even more telling. So the crypto market has zero to do with the economy. And so, but the economy, of course, inflation, what we've seen with prices, what we've seen with slowdowns, and interest rates, that is the economy. And so we are very likely to see a slowing, if not negative, because we haven't actually gone into negative growth yet, which would indicate
I thought we printed a negative number last quarter. That's why if we print another negative number, we're in recession, theoretically.
What I saw was zero. What I saw was a reduction of it was 0.0%, I think, of growth in the second quarter was the forecast right now. Anyway, it doesn't matter. We're going into a recession.
I got it right here. Yeah. According to CNET here, in the first 3 months of 2022, the U.S. GDP dropped 1.4%.
There you go. If we do
that again, we're in a recession. If you look at the definition of a recession,
right?
So there you go.
So with that said, the only question is going to be how deep does it go, and to your point, this can be a good thing. This is good. This is going to get a lot of the crap out of the water. This is going to, separate a lot of the frothiness of of stuff that wasn't going to be valuable anyway, and is going to provide an opportunity for new entrants in all kinds of things, new entrants in value, new entrants in marketplaces, new entrants in investment opportunities, and all those kinds of things, as long as we don't go into a place where, because if you look at some of the fundamentals, we still have a lot of good fundamentals, unemployment at a low rate, and all those kinds of things. So this is likely what really annoys me is the dystopian landscape that is painted by the major news media about what a recession is, right? If you listen to the mainstream news, you'd think a recession is going to be, we're all going to be on bread lines, in the next month. And this can be an okay time. Now, this isn't the time to look at your 401k, and it's not the time to look at your portfolio of your stock market. But, keep in mind that it wasn't that, even in the Great Recession of 2008 and 2009, from an investment perspective, came out of it pretty quickly. 2010, 2011, 2012, which is hard to get your head around when you're thinking about, well, it's going to be next year before we can actually feel like we're out of this thing. Just know that the headlines for the next 6 months are going to be dire, right? I mean, it's going to be, I'll already make the prediction. This is my prediction. Yep. That in October, as we start getting into football season and you and I are talking about the Browns and the Cowboys and all of that, you're going to see all of these headlines coming out of mainstream news calling, is it going to be Christmas for your children? Are you going to be able to put any presents under your tree? The recession is going to kill you. I mean, it's going to be that, right? And, what I'm hopeful, I mean, look, anything can happen. There are global, economic, socio-political, all kinds of, things that are going to be coming up this fall that could affect positively or negatively the economy, not the least of which is war, elections, so it's going to be a frothy fall. Just know that. It's going to be a very disruptive fall, a very distracting fall. The key, I so believe in what you just said, which is if you keep your eye on the ball and you focus on getting the work done and you focus in on value, you will be okay. You will be all right here. And that's at least my message. Mm-hmm. is just it's time to do the work.
Just, I guess what I would say is I I benefit from this time period because I remember it so well. And it was very, very difficult to keep doing all the things and believing that what you're during 08 really and 09. Hard. But that's what I'm saying. What a great opportunity. I talked about this in my newsletter. There is no reason why Content Marketing Institute should have created Content Marketing World. The reason we were able to do that was because the big media companies like Advertising Age and B2B Magazine, who should have done it, never did, because during 08 and 09, they stopped investing in things. They just kept doing what they were doing. They just hold down the fort, get whatever sponsorship and advertising we can. We're not doing anything new. Well, we did. We focused on this area called content marketing. You and I were out there doing all these speeches and talking about how and in 2010, it just was like, oh my God. Look, everyone's coming to us for advice and for consulting and for education and whatever, because we were doing this for the last 2-3 years and nobody else was.
Yeah.
And the same thing is going to happen. So this is where the opportunity is, because your competition right now from a content perspective will stop in a lot of cases. You'll get 75% of the content creators in your particular niche will stop doing what they're doing. And you're seeing it already. You're seeing podcasts stop. Yeah. You're seeing e-newsletters stop. You're seeing Twitch streams stop. They're just like, I don't know. And they freeze because of what you're saying. Everybody freaks out. That's exactly right. And they don't want to spend the money some of the money that it takes. So get your expenses in order right now. Focus on what you need to do to keep that runway pushed out as far as possible so that you can do what you need to do. And then when everybody's purse strings open back up and everyone gets comfortable, you're there to reap a lot of those rewards.
Yep, that's exactly right. I left my job, to come join with you. Biggest mistake of my life.
Of your life.
2009, right? I mean, I technically left in 2008, but I was still on a freelance basis for that company for about 6 months as I worked my way out of the CMO job. But in 2009, it was. I still remember this conversation. It's etched into my brain. It's one of my favorite conversations of my entire career. Is the one you and I had on the phone, and you were like, "Are you all in?" And I'm like, "I'm all in." And then I got and I got off the phone and went to my wife and I went, I just told Joe I'm all in, and basically left all that and basically went all in, and it was 2010, 2011, 2012. We wrote a book, we did the thing, we did the work, we flew around, we did we worked our asses off, and it was a good thing. Yeah,
it was a good thing. And there were a lot of smart people talking about some of our concepts, but the difference is that you and I were actually doing the work and executing it, and we didn't stop. That's it.
And it wasn't that it wasn't hard. It was really hard. It was difficult at times, but the whole point is that you didn't let the sort of world distract you from the good you can do. So,
So, and but
there you go.
I'll leave it with the other thing that you mentioned that's really important is probably not a good time to look at the old 401k or retirement accounts at this point, because you're going to be like, what happened? So,
I know.
Everything's underwater right now, especially if you're in tech, in any tech at all.
Oh my God! Yeah, I looked at my Ameritrade account the other day. That was a mistake.
But I would say, I would feel fairly confident that said if you look at it from a year now, you're gonna be like, oh, that was better.
Yeah, that's right. That's right. I mean, I was looking at it because there are a few things that I may just want to clear out and just sort of take the loss on because they're just it's pretty obvious they're going to zero. Some of the smaller things that I've done, but I mean. In any event.
All right. Well, that was good. Right. That was a good, positive, uplifting chat.
There we go. Excellent. I hope it was. Yes, we have.
Let's talk about a bill that's going to threaten the freedom of expression.
Exactly. There we go. All about it's those damn Canadians. They're doing something in a way
mean.
That is.
Yeah.
They're always so impolite. So this comes to us. This is a press release we'll link to in the actual in the actual show notes, although there are a number of news organizations, mostly, as you might expect, Canadian, covering this. Apparently, Bill C-11, which this particular press release has called a threat to freedom of expression. On November 22nd last year, says the press release, the federal government, meaning the Canadian federal government, introduced Bill C-11, the Online Streaming Act, in the House of Commons. Its goal is to allow the CRTC, that's the Canadian I guess the equivalent of the FTC here in the U.S., to regulate online streaming services. The Netflixes and Disneys of the world, as well as platforms like Spotify and YouTube, are targeted by the bill. It will potentially cover almost all audio and audiovisual content accessible online in Canada. A new MEI publication warns against the possible economic, cultural, and legal consequences of this bill. The goal of the bill, says the CRTC, is to correct the current legislation's blind spots and expand the empire. No, that's not from the CRTC. That's from them, basically. The people who don't like this bill. Anyway, the idea here is that, as the press release goes on to talk about and other news articles talk about, is that I guess, and this is where my confusion starts, Joe, and I would love to get your take on this. As I read through a bunch of the analysis here, there seems to be a lot of a lot of different interpretations around what this law would do. Some of it basically say these platforms like Spotify and YouTube and others would have to sort of prioritize Canadian content. Others say that that's not the case. It would just be a suggestion that there would be some percentage of Canadian content featured. Some of it is that it would push other content down. Some of it says that they're going to have to change the way that they present content to Canadians. What is your take on this thing?
It's very difficult because there's so many things attached to this. It looks like what they're trying to do is bring the Netflixes, the Amazons, the Spotifys under the same rules that apply for traditional broadcasters in Canada.
Right.
So
there you go.
And the issue with that is that a local radio station and a local television station in Toronto has very different ways of creating content than, say, a Netflix, which is a international streaming service, and Amazon and Spotify. So this is from what I can gather, a very nationalistic bill for Canada, because they're like, oh, we want more Canadian creators that you focus on them, more Canadian artists, and we want more Canadian content given, priority. Which is all fine if you say, oh, I'm a Canadian artist and I want this to happen, but that's not what's going to happen, I think, because it just gives this organization, which is, what is it? The CTRC, is that right?
The CRTC.
CRTC. Which is, what does that stand for? Canadian radio and television something?
That's it.
Sorry.
Yeah.
So you're going to put this under their purview, and what it does is, I know the whole press release was talking about gloom and doom and Big Brother and that whole thing. You might get some of that. And you might also get the fact that Netflix says, forget this. I don't want to deal with what's going on in Canada. Forget it. So you could actually hurt Canadian consumers through this.
Right. That's right.
Because they're like, I don't want to play by your rules. It's happened before. Like, right, Netflix is gonna say, I don't want to deal with North Korea. Done. Whatever. You could get the same kind of thing. So it's just a lot more difficult to put rules on. And you know that you've been talking about, freedom on the internet forever, and that you're so. It's so important to you. What's the net neutrality?
Net neutrality, yeah, exactly.
So if you get this in there, what is it going to mean?
This is a similar, it's different, but it is similar to net neutrality, and that net neutrality is ostensibly enforcing a idea to say that you can't prioritize traffic, right? You can't prioritize internet traffic, or, so this was to prevent, for example, Comcast or those who provide your bandwidth charging you extra money to get, Netflix, or to be able to surf Google, rather than Facebook, right? So they might say, well, you get a package of internet, connectivity that, if you want to get on Facebook, well, you're going to have to pay X. If you want to stream, media, you're going to have to pay Y. And so that was the idea behind, is that all internet traffic is treated equally, therefore net neutrality. This is a similar kind of thing where they're saying, look, you have to treat Canadian content in a different way, which I totally agree with you. My interpretation thus far seems to be that there could be a lot of unintended consequences here.
Yes.
And so, so by its very nature, it makes me want to be against it. But I think it's something that we should just keep in mind, that it's not necessarily as draconian as some of the media coverage is saying.
There's a lot of support for this. It seems like they're really trying to push this through quickly. If you just looked at it and said, "Oh yeah, of course, the traditional broadcasters should be treated just like Netflix and Amazon, and everything should be the same." The problem is, it's not just those big companies. If you say streaming content, what that means anyone, that any streamer. That's not just a big company.
Right.
Like, how do you define which companies are going to have to be under such purview and which are not? And so individual content creators could get hurt on this as well if they're not, I have to have certain amount of Canadian artists and I have to do this and I have to, like, what does that mean? So we just don't know yet. That's my problem with any kind of bill that goes on this, is that it's going to be the unknown stuff that's really going to hurt. So I'd rather not see it.
Yes.
At all.
There are 150 amendments to this bill right now.
I know, it's so crazy. And they're really trying to fast. It's kind of weird. I mean, I don't know if you've read the secondary articles here, but there's a group of people that are really pushing this through without discussion, because they're trying to get this thing passed as quickly as possible. And I'm like, well, what about the discussion here? What are we doing? There's something weird going on with this bill.
Yeah, something weird going on in Canada. There's your title for your episode, folks. As the something odd going on in Canada, which is not usually the case. It's usually pretty.
It's usually something odd going on in America
up there, up north.
Canada's like, what? What are you doing?
Yeah. Well, they're like, sorry. We're sorry. Sorry. All right, it's my Canadian accent impression. That's probably
sure
not great.
All
the Canadians are rolling their eyes right about now. All right, let's move on to our next story here, which is, of course, about our favorite company that we like to dunk on a little bit, which, of course, is Facebook. Yay! So here's this is coming to us courtesy of, again, a media operator, great newsletter that I have come to enjoy, as well as Joe. Facebook rug pulls the media companies again. First of all, great headline. Well done, you. The article opens up by saying, if there's one thing publishers can always depend on, I would actually add the phrase, and never learn from, it's Facebook pulling the rug out from under them. And yet, even though they know it's going to happen so often, publishers are unable to resist the temptation that comes from a Facebook offering. This is, he now pulls from the Wall Street Journal to say, Meta Platforms Facebook is re-examining its commitment to paying for news. People familiar with the matter said, prompting some news organizations to prepare for a potential revenue shortfall of tens of millions of dollars. The company has paid average annual fees of more than $15 million to the Washington Post, just over $20 million to the New York Times, and more than $10 million to the Wall Street Journal. According to people familiar with the matter, the Journal fee is part of a broader Facebook news deal, largely negotiated by parent company Dow Jones, including annual compensation worth more than $20 million, people familiar with the partnership said. The company is looking to shift its investments away from news and toward products that attract creators, such as short-form video producers, to compete with, guess what? TikTok. Facebook always loses focus. 3 years ago, it was thought that its readers would want to bypass media paywalls and just read news articles on the platform. But fast forward 3 years later, and Facebook has a shiny new toy that it wants to play with. In another few years, it'll be on to something else. Boy, do I agree with that statement. The article goes on to talk about some of the smaller publishers that could be affected, and as well as some of the things that publishers might do so that they don't get the rug pulled out from them again. So, do we never learn, Joan? Do we never learn? I guess is the question for you.
Well, it's interesting, if you read through this, there's a couple comments that says, hey, if you want to play Facebook's game, that's fine. Take the money. but don't look at it as long-term revenue. And boy, was that good advice. Because it's just you know it's going to go. By the way, I think we predicted on this show that at some point very soon Facebook will pay zero. They will pay zero out for content to traditional publishers because they're focusing so much on getting more creators on the platform that are not charging them anything at all. And that's the way it's going to be because they don't want people to leave their platform. They don't.
That's right. There's big signs right now all throughout Facebook, I'm sure, that say it's about TikTok, stupid. They don't right now. Articles from Wall Street Journal, articles from New York Times, that is so not on anybody at Facebook's mind right now in terms of competition and where eyeballs are going. It is 100% to TikTok. That is where they are losing attention. They are losing time on site. They are losing everything to TikTok. And so, there's a corollary, by the way, just so you know, that we could have covered that. And I'll try and find the link for the show notes where they talk about how many kids, young people, are getting their news now from TikTok. And they're actually getting, they're actually starting to follow people who put up news on that channel. So. That pendulum, by the way, will swing back at some point. So it's just a question of when, and it's just it feels like publishers, maybe they know what they're doing here. Maybe they're like, yeah, we'll just take the money when the money's good, and we won't count on it when it's bad. But it just never seems like these deals get made, and then we come on and we go, nah, this is going to be bad, and then it ends up bad, and then somebody goes, oh, but it's going to be coming back, and then the pendulum swings yet again. So. Maybe this is just another pendulum swing, but I think where Facebook's stock is right now, we could look at this and say, this might be the pendulum that doesn't swing anymore because Facebook's in trouble. Let's just put it that way. They're still a great company. They're still killing it and crushing it when it comes to advertising, relatively speaking. But boy, are they trying to, scramble right now for something. They just announced that they're killing off all of their investment in the eyewear that they were going to create, the hardware that they were going to create for their metaverse idea. So who knows what's going on over there right now?
Yeah, it's really interesting. It's funny. I saw a stat the other day that I don't know what year it was, but Microsoft stock hit $57, went down during one of the recessions, and didn't surpass $57 for 17 years.
Yeah.
Now, by the way, they're I think the second or third largest company by market cap in the world. So they've held up probably better than almost every other company in the world out there during this period as well. So if you remember Microsoft making all these strange bets and doing these things, Microsoft couldn't figure themselves out, and then they did. I could see the same thing happening with Meta. They don't know who they are. They don't know what they're going for. They had a great product. It took off, and now they're trying to figure out what's next. They don't know. And now during that time, what happens is all this ancillary revenue that's sloshing around, that comes back. This is what we're talking about. That revenue is never going back to publishers again. So if you were getting some of this, congratulations.
Yeah, right.
You won't get it again. Right. And nor should you, by the way. Nor should you anymore, because everyone knows what Facebook is. If you want to play that game, I think it's a losing battle. Facebook is on to bigger and better things. Done. Focus on your own media channels.
So yeah. There you go. All right. Well, let's move on to some rants and raves. Yeah. Not that we haven't been ranting and raving all episode, it feels like, but
one big rant.
This is the part of the show, empirically favorite part of the show, by the way, where Joe and I go off on a little bit of a rant or a little bit of a rave over something that makes us feel like we can fit into Marilyn Monroe's dress, or quite honestly, like we're just going to have to walk the red carpet in some kind of replica. Let me go first, because you have 17. Oh, I was going to ask you if you would wear Marilyn Monroe's dress, but yeah.
Let me do mine. This is a shout out again to Simon Owen's newsletter. Writes an interesting article, to say the least, on when should a creator throw in the towel. It's gotten a lot of good shareability. I saw it number of newsletters, but basically goes through the different pros and cons and when you should whatever. And it really comes down to especially during this time, it talks about the longer you go, the better chances you have for success. Like, not like that's rocket science, but that's it. It's absolutely true.
Yeah.
The longer you go, the more you have for success. We talked about the example at the beginning about, us pushing through content marketing when no one else did. Well, a lot of people don't know that in September of 2009, like, I had almost given up. I said, because I'd been doing, I started in April of 2007, and by September of 2009, I still wasn't happy with where things were. I didn't think we were going to make it, whatever. And I said, I'm just going to give it a little bit more. I ended up giving 6 more months to it, and everything changed. The market shifted, money started to flow in, that we got the model right. You and I started working with each other. Maybe that was it. Maybe that was the difference.
I'm sure that was exactly
I think that was the tipping point.
You're just now realizing this?
Exactly. It just hit me. After 20 years, it just hit me that
there you
it's
go.
all you.
Finally.
But anyways, it's a really interesting article that Simon goes through. So it's the time. And so what do you need to do to get to the time? And he brings this up at the end, and the Tilt has their big research study, our big research study coming out in a little bit. And we really focus hard on runway. And the stat in that is 17 months. From start to 17 months to financial independence. Obviously, give or take. Some people are less and some people are more, but that's the average. So it takes time. It takes a good year and a half plus in order to make that. So you have to make decisions now. And by the way, this is for content marketers and for content entrepreneurs. Like, these are the times when somebody's looking at a marketing budget and they're going to say, kill that podcast program. Kill that content marketing thing. So you have to do what you need to do now to get below the radar from a content marketing standpoint and from a content creation standpoint to cut out unnecessary expenses so you can focus on delivering an amazing, as you would say, ongoing experience to them so that when it does clear up, you're there. You're still there. You built that loyal audience and you can monetize that loyal audience in many ways. So anyways, great article. Loved it. You get a time to read it. There's a lot of good insight into this, but really it comes down to time and runway, and the research actually shows that.
I love it.
There you go.
I absolutely love it. Yeah, no, it's exactly right. And yeah, in 18 months, it's just you have that. If you've got that in your head, you're doing
well,
great.
You and I have been on.
By the way,
I remember you and I being on a number of consulting gigs, and they were talking about what could we expect after 6 to 9 months, and we would just be blunt and just say, if you're just going to do this for 6 to 9 months, and that's all the time you have, you might as well just go buy advertising. Like, just.
Yeah,
don't waste your time creating the infrastructure to tell amazing stories and create these amazing experiences that no one else is doing if you're going to stop in 9 months, because you're not going to see the results that you want to see.
That's it.
For 12 to 18 to 24 months.
That's exactly right, because the entire strategy is build an audience and then the audience provides value. But it's like the Jerry Seinfeld thing. It's that first part that's so important. You know what I mean? It's like there's the building of the audience, and then there's the holding of the audience.
I love that part. Now, I don't think you understand the dimensions of what a reservation is. It's like, I can make the reservation, but the important part is that the reservation is held.
Right. So that's it. Is you build the audience first. That takes time. Then the audience starts to provide value. And that's what a lot of us forget. I can't tell you the number of times I've had a conversation with a CMO or a VP of marketing, and they said, we built a blog, and then on day 2 of the blog, it didn't start producing leads. And so we thought it was a fail. It's like, you just want to sigh and go, no. You got to build the audience first. It's like, we launched the product, and on day 2 there were no sales, and so the product was a fail. It's like, no. You have to market the product. You have to build the marketplace, and yeah, that's the important part.
Yeah. What do you got?
All right. Yes, I have 2 very quick things. The first is just something totally fun. We talk a lot about internet nostalgia on the show, and it wasn't my first experience on the internet. That predates even the web. But one of my first obvious, as many people's was AOL 3. And AOL in the early days, 1996 timeframe, was sort of the internet at that time. That was where you went and you had chats and you could read articles and you could, even at some point shop for things. And so what somebody has done, God bless them, is they've reversed engineered AOL 3, and it's a Canadian programmer who did it, by the way. Canada in the news again here. Rewrote basically in Python the entirety of AOL. Well, I don't know if it's the entirety, but it's a good chunk of AOL 3.0, including chat rooms, including the news, including a bunch of things. And you can actually download it. There's a whole Discord community, and then there's a link to the actual download where you can download it for Mac or PC and upload and then launch it and actually converse with people on, actually have the experience. There's not many people on there, obviously. It's pretty new and who knows how big it'll actually get. But you can get a screen name and you can actually go chat and all those kinds of things. It's just fun. Amazing. It's just a really fun thing. And it just brought back I looked at some of the interfaces, and it's just brought back so many memories, and it was a really fun. I'm gonna
tell my mom about that. She's gonna be really excited.
Exactly. The only thing it doesn't come with is sort of the CDs, the mountain of CDs that you would get.
You could go on eBay and buy 1 million of them if you want to. So,
that's true. Yeah, as coasters and stuff like that. All right. So the last thing that I'll rave about, and thanks to Nick Ogle for this, is a Mark Ritson article. And we've talked before about Mark Ritson and how we rarely agree with him. But he wrote a really good article in Marketing Week, and just want to rave about it for a second. Now, there is a part that I disagree with, but as shock to no one. But he wrote this article. It's in Marketing Week. We'll, of course, link to it in the show notes. And it says, suffering from imposter syndrome, the cure is simpler than you think. And he writes about imposter syndrome in marketing, and really just very eloquently, and talks about the idea that marketers have always had sort of a, really struggled relationship with business. And I think that's absolutely true. And the history of marketing shows that marketers have always sort of been the imposter syndrome kid in most businesses and trying to always prove themselves. But he talks about marketers today, and what he says is, it's a really interesting thing when he says how to get out of that imposter syndrome in terms of being a marketer these days. And he said it's not helped by, as he calls out Gary Vee and Neil Patel as sort of, he calls them Philistines, of sort of talking about growth hacking and some of the things there. And he's a big proponent, as I am, and I agree with him 100% on this, in getting a classic education in marketing. I think it's absolutely imperative for any marketer to immerse themselves in the classic education, as you've heard me probably annoyingly at sometimes go on about, in terms of understanding where you came from, where your practice came from, and how you develop your sort of core principles of marketing. And he talks about that at some length. He then goes on to talk about, and this is the only part of the article of his that I really disagree with, where he basically says he doesn't have imposter syndrome at all. Good for you, Mark. That he basically is confident, and he says the reason that he doesn't is because, and the reason that we shouldn't is because so much of what is marketing today is crap. He basically says one of his main things is to point out how garbage like most marketing is these days. And his point is that saying that, marketers shouldn't feel bad about themselves because they'll basically everything else is horrible, so they should feel good about that. And I think that's just the exact opposite. I just think that's an awful piece of advice. And so what I would say is that 90% of this article is great, except when you get to the part where understanding that the world is crap and honestly you won't do any worse. I think that's bad advice. Yeah,
That's a defeatist attitude.
It truly is in my mind. What I go back to is it's a paraphrase of a great Steve Jobs quote, actually, where when you look at the excellence, the cool, the most interesting things, the most interesting marketing projects in the world, which is always where I want to focus. What's amazing, what's wonderful, what are people doing that are really great out there? So it's not looking at the great stuff and realize that that you can't do any worse than the crap that's out there. It's actually looking at all the amazing stuff and realizing that none of it is created by anybody who's any different than you. That's how you get over imposter syndrome, is that you too, nobody who's doing these amazing things is any better or different than you. You can do these things too. It's looking at all that greatness and saying, I'm just as capable as they are of creating that greatness. That's the way to cure imposter syndrome in my mind. And so that's the only amendment that I would put to Mark's very interesting and good article, and I'm glad he wrote it.
The fact that you agreed with something that Mark Ritson said is
yeah, I know, that's a big thing.
That's really crazy.
Yeah.
So
I'm just, it's good of him. I mean, look, if I know Mark, and I don't, let's be clear, he does sell a marketing education course, his own sort of little personal MBA. So is there, if the conspiracy theorist in me goes, okay, there's, I didn't see a call to action to his class in the actual article itself, but
it's
if
probably
you
a hidden
marketing
link.
week enough,
He's probably got it in there somewhere.
You'll find it. You'll find it. You'll find the hidden link to his class. So yeah, there's that.
Very
so
good.
Anyway,
Very good.
It's a good article. Go read it.
So what do you got going on besides the launch of your new thing?
That is really it at the moment, other than obvious client work. Been doing, heads down, working on client stuff. In the next couple of weeks here, gonna go see, gonna go get out of town for my birthday, which is coming up at the end of the month, and so that's really the only thing we're planning for. Yeah, it's gonna be fun, and so yeah, heads down, starting to get this thing cooking. So,
Good.
trying to work that into my workflow, but trying to be good about facilitating the wonderful people who are coming into this thing. So that'll be my focus for the next week or so. How about you?
Excellent. No, I wanted to throw out too. We just launched a really cool course on pitfalls for content creators from a legal standpoint. It's fantastic. Ruth Carter does it. So if you're a content creator out there and you're concerned about legal stuff, you can go to education.thetilt.com, sign up. It's completely free. So we're starting all these free mini courses. We've got 3 or 4 of them up there right now. So that's sort of our new pivot. We pivoted away from paid courses all the way into free courses. So far, it's working really well. So just a
Ruth is great at
data
that.
point. Yeah, Ruth is great, awesome with that one. And we have our finally, the Polizzi family reunion is Sunday. So that's where.
Oh, that's right.
We have 70-some people coming, which is amazing. For Polizzi. We got the Polizzis, we got the Pultzes, we got all the everybody, all the name variations are coming.
You get some pizza, you get some Polizzi, you get some pizza, you get some gabagoo.
You will get some pizza. I said it's funny because you and I had Grandma Polizzi's famous pizza recipe when you were over at the house, and I put that.
That's right.
That was the lead article in my newsletter. I gave the recipe away. So.
That's lovely.
Yes. I want people to share that in what we love. So
you're a giver.
I'm a giver.
You're a giver.
I'm a giver. Somebody's going to be mad at me for that one. There's some Sicilian that's going to target me because I gave away Grandma Polizzi's famous pizza recipe.
Well, you never want to be targeted by a Sicilian. That's for sure. All right. Ladies and gentlemen, that is it. We are getting out of here. In the meantime, if you want to get all the goodness of this wonderful show and all the show notes and links that we talked about, get on over to our website at thisoldmarketing.site. Remember, hashtag us up on the Twitter. We love those story ideas. Very helpful for us to get to those stories as we get into sort of putting this show together. And of course, you can get over to the site to dive into any of the other 327 episodes. It's pretty amazing. Just get on over there to thisoldmarketing.site, and until we see you next week, remember, it's your story to tell. Tell it well. We'll see you next week on This Old Marketing.